Hey guys, this is the Real Estate Podcast, and this is your host, yours truly, Matt Teifke. Real quick, before we dive in, if you don't mind, please make sure to subscribe to our channel. We want to get the message out that real estate can be for everybody. We want to share the entrepreneurship that we're learning along our journey. So before we dive into the episode, please make sure you share with your friends, and we want to continue to add value. So thank you guys, and let's dive right into the episode.
Cannabis stocks, it's nothing to hide, been an 11-month drawdown. It's been rough, but we haven't really lost assets. It means most investors have been stuck with it for the long term. They see the positive value. They think it's still coming, especially in US cannabis. So, we still have well over $1 billion in assets. Money goes in and out every single day.
Welcome everybody to the Real Estate Podcast, where we typically talk real estate, but cannabis, investing, entrepreneurship. Today we have Dan Ahrens. Super excited. He's a portfolio fund manager, stock ticker MSO and YOLO. And you guys are doing some really cool things in the space. I've been investing in cannabis for a long time, and I really appreciate you coming on, man. We'd love to kind of get to know you a little bit, dive into your background and talk some business, talk some cannabis.
Thanks for having me on, and thanks for covering the space. And just in case anybody's looking up tickers quickly, it's MSOS or MSOs with a S at the end. Fund we manage,
and that's essentially a fund that's owning all the different cannabis tickers. Is that the accurate way to kind of describe it?
Yeah. Let's just jump right into that. Here at Advisor Shares, we have two different funds, and these are. Everything that we do at Advisor Shares are exchange traded funds or ETFs, listed on the NYSE or listed on NASDAQ. And we have two funds covering the cannabis space that I manage. We even have another fund that's managed by a sub-advisor, a little bit different strategy, because we're doing a lot in the cannabis space. Sideline here for you. I'm sorry we go off in different directions, but we have another fund. We have a Advisor Shares Psychedelics ETF, ticker symbol PSIL. That's short for psilocybin, if anybody didn't know that. Back to cannabis, because that's what we came here to talk about. And one of our funds happens to be the largest cannabis ETF in existence with over $1 billion in it. That's Advisor Shares Pure US Cannabis ETF. Ticker symbol, as you said, is MSOS or MSOs. And for people that cover the cannabis space, know that MSOs are multi-state operators. Has to do with federal law in the US that we'll talk about more. But cannabis operators in the United States have to have state-by-state approvals, state-by-state licenses. They can't transport across state lines, and they get the term multi-state operators. So that fund's, again, the biggest in existence, the biggest in the world. It's only been open for a little over a year. We opened that in the fall of 2020. I had to keep my years straight. And it's strictly focused on the United States, as the name implies. Advisor Shares Pure US Cannabis ETF, because there's a big difference between the Canadian market and the US market. Yeah. And this fund's focused only on the United States. We have the other fund, Advisor Shares Pure Cannabis ETF, ticker symbol YOLO, and that's more of a global strategy. It's been open a little bit longer. It has a track record back to 2019. And while it's not the biggest in the United States, since it was opened, it happens to be the top performing cannabis ETF in existence. It's down. People have lost money in cannabis in the past year, especially, but its long-term track record is number one. It was the top performing fund in the up market in 2020, but it owns US companies, it owns Canadian companies, it owns Israeli companies. It's a global type strategy to investing in cannabis. Sorry if that was a little long-winded there.
No, man, I love it. It's a different world for me. I've kind of like picked my individual companies, but I definitely understand the value of being a little bit more diversified through MSOs, and having a little bit of all the companies. And from what I see and what I understand, help educate me on this. You guys are constantly buying and selling and kind of reallocating your positions to different companies. Is that accurate? Like almost
Yeah.
every day?
Yeah, no, yeah, yes and no. I don't want to give the impression that we're overly active. The fund is actively managed. So that means it's not an index. An index doesn't really have a manager, or all they're doing is managing to usually have the largest company rated number one, the second largest company, number two, et cetera. So we're an actively managed fund, and that means we have what we think is expertise watching these stocks all the time, picking which stocks we want to own, which stocks we want to overweight, which stocks we want to underweight, which stocks we might want to avoid completely. And especially in something very new, extremely volatile like cannabis, I think we've proven that active management is very important. And our track record so far is that we can do better than just blindly investing in an index. Something else about new and volatile like cannabis, we think a diversified portfolio is important, rather than just picking a couple individual stocks. A couple individual stocks, you might do very well. I'm not knocking it. But we have a diversified portfolio that owns maybe 30 or 40 different stocks all at once. And again, we think we have some expertise behind it, picking the best stocks.
Yeah. And I'm curious, like I totally get it. You ever like find yourself falling in love with a certain company and like, man, we got to go heavy on this one, but we got to keep the diversified strategy as a core principle? Like, is that ever some kind of thought process you go through?
Somewhat. It's we try to get a lot of information from a lot of third parties. There's different ways to manage an actively managed fund. Some people are purely technical, purely quantitative. We like to get a lot of information from a lot of sources. We like to talk to the companies and their CEOs themselves. And to properly manage money, no, you can't do what you just said. You can't fall in love with anything. You have to be unbiased in your decisions.
Right.
But while being unbiased, yeah, we decide which companies we like the best.
Yeah.
But we're betting on that company's balance sheet. We're betting on that company's revenue growth. We're betting on that company's executive team.
Right.
Well, a lot of those types of things are what we're making decisions on. And yeah, we might fall in love with the best ones.
Well, like I know, at least from my perspective, I mean, are you okay? And do you talk about individual companies all the time? Is that something we can dive into, or is that?
Somewhat. What I'll do is I'll often refer back to, hey, look at our holdings. Look at what stocks our fund owns and which stocks our fund owns in its top holding and top 5 holdings and top 10 holdings. And that's a little bit of a voting machine.
Yeah. I figured, because I follow it and I know these companies pretty well. Like I've been studying them for a long time, and like I'm thinking like Curaleaf. Like I know that's a big holding of y'all's. And obviously right now when things are tough, which I'd like to dive into and get your perspective. I'm struggling on my end, and sure we all are. But like that's obvious. Like they're going to be around. Like they got the
Good
cash
point.
coming in, they're building their business. So it's easy to go way heavier in Curaleaf than some of these other ones that are a little bit more speculative. We all believe in the industry, but Curaleaf's, they got the machine running, and obviously Green Thumb and some of the other ones like that. I took a huge bet myself on Acreage, and I know that's a small holding of you guys, but it's been rough. So I think that's more of a gamble. I'd love to hear any thoughts on all that.
Well, hey, it's a little bit of a nod to active management that the horses we're betting on are always changing. Acreage was a hot story 3 years ago because Constellation Brands, big alcohol company, made a huge investment in Canopy Growth. That's also back when the Canadian side of the border legalized adult use, and stocks went crazy in Canada. The problem was they didn't have sales. They didn't have strong balance sheets in many cases. They traded on hype and excitement about cannabis suddenly being legal in Canada. They could also list on major exchanges in the United States, as long as they kept their cannabis business, on the Canadian side of the border and obeyed laws on both sides of the border. These companies like Canopy Growth were able to list on NASDAQ. Now, I'm dropping those names because then they made a big deal with Acreage, a company you invested in. A lot of people invested in, right. And it was there's some big money, and they had Constellation money behind them. Sort of an option based on legality in the United States that everybody thinks is coming at some form and in some fashion, but no one knows when and how long it's going to take and what it's going to look like. And as things progressed, as things matured, that deal with Acreage looked less and less attractive. Yeah. So big story a couple of years ago, and now it's been replaced with some other leaders in the space, like Curaleaf that you mentioned. I think a couple of things that's very important for listeners to understand is there is a very big difference between the Canadian market and the US market. And sometimes people just blindly invest in cannabis because they hear, oh, something's happened in the United States. They're going to, approve it. Somebody's promoting a bill. And you know what? Canopy and Tilray, even some other names I'll drop, Aurora and Hexo, those stocks are listed on NASDAQ and they pop up and they have good trading volume. But, I'll be blunt, a couple of those companies are just dumpster fires for their actual balance sheet and revenue growth or revenue, lack of growth. Yeah. And, people still need to pick stocks actually based on fundamentals. Sure. Which to me is most often balance sheet and revenue growth versus the stock price. Canadian is Canadian, US is US. Yep. So again, our largest fund is MSOs or MSOS, and we do invest in companies like Curaleaf. Now, you want to talk names a little bit, and I'll drop some names here. There's a big difference between the Canadian market and the US market. In the Canadian market, sometimes the very biggest companies that might be the most heavily weighted by a stock index might be the very worst. Yeah. You really, really have to be selective on the Canadian side of the border. In our fund YOLO, I have a very easy favorite Canadian. It's Village Farms International. Yep. They're a smaller name, not widely as known as Canopy and Tilray and a couple others. They have greenhouses all over North America. Yeah, they're in Texas. They're in Texas. They have a lot of expertise in greenhouse growing tomatoes and peppers and cucumbers. And they took that expertise and made one of the largest greenhouses in North America in British Columbia. And they sell one of the highest quality and the lowest price cannabis in Canada. So they are easily the most quality operator in Canada, in my opinion. So opposite of the spectrum, you have companies like Aurora, and I got nothing positive to say there. Yeah. So let's get to the United States. In the United States, I'm going to name drop here. Some of the top operators are Curaleaf, like you mentioned, Trulieve, Green Thumb Industries, Verano, Cresco Labs. Those are pretty much anybody's opinion, probably the biggest five in the top five. They have different business models, so they've gone about things differently. But we have a very nice situation in the United States, a very nice luxury, if you want to call it that. I like all five of those operators. I like different things about them, but there's no dumpster fires in there. There's high quality management. There's good companies going about business in a pragmatic, maybe even a frugal way, if you want to call it that, as compared to some of the Canadians that had excessive executive pay. They had over expansion. They overbuilt, they overhired, they overgrew cannabis, ended up destroying it because they couldn't sell it. They didn't have enough sales. Sales are much bigger in the United States.
Yeah.
So again, back to those big operators in the US, I like them.
Yeah.
We have a very nice situation where the biggest ones also happen to be among the very best. I said they went about business a little bit differently. Curaleaf. Boris Jordan is the chairman and CEO there. And that guy is a bulldog in a good way. He's a very wealthy man, and he wanted to be the biggest and the best and take no prisoners. And they have the largest footprint. They operate in like 23 states right now. You got to be careful with those numbers because they're always changing, especially in the US, where state approvals are happening regularly every year. So Curaleaf has the most dispensaries. They got the biggest footprint. And that's their business model. They've been expanded with an acquisition that cost them almost nothing into Europe. Very different business model is TrueLeaf. Happens to be the largest holding right now in our fund, MSOS. Some people said they shouldn't even be called a multi-state operator a couple of years ago. They should be called a single state operator because virtually all their business was in the state of Florida. Florida is a very healthy cannabis market. It's actually just a medical marijuana market right now. They haven't even approved adult use yet, but it is very, very strong for its existing. You got to call them patients because you got to have a medical marijuana card, and their growth of. And TrueLeaf has a 50% market share. People keep trying to cut into their market share, but they're not able to. TrueLeaf just dominates in Florida. And they have some of the very best margins for profitability. They started expanding into other states using their very successful business model in Florida and replicating. And then they made an acquisition last year of Harvest Health. Harvest Health already dominated the Arizona market. Very strong in the Pennsylvania market. So through acquisition, TrueLeaf is suddenly dominating in a handful of other states that are very good states. So while they are a multi-state operator and multiple markets now, a very different growth pattern than you'd see with Curaleaf. That wanted to be the biggest footprint. The other thing about the U.S. is these companies don't have what I would call excessive executive pay. They don't have federal legalization, so they can't list on major exchanges. They don't have access to a lot of institutional money because they don't have federal banking yet. So these companies have been frugal. I used the word pragmatic earlier in their growth. They've been smart in their growth. They couldn't just get a bunch of money in the bank and throw it at the wall and see if it sticks, like we saw with some overgrowth in Canada. So hope I'm not rambling too much here. I obviously like talking about this stuff, but
I love it, man.
US and Canada is different.
No, I'm fascinated, and I'm sure you would include TerraSend as maybe the next right behind those on the names.
Absolutely.
And like, I'm just so intrigued because I follow this. I've been following it for a long time. The acreage story, I come back to that a little bit. It kind of falls into both of these worlds because, at least from my perspective, like I was in acreage as a shareholder whenever they were taking out 60% interest loans and thinking the lights were going to turn off. And now, at least from where I'm sitting and understanding things, they've actually turned it around and the company's actually doing pretty well, but they're still tied to Canopy, So like, it seems like they got some good operators in there. Last quarter, I think they did like 44 million revenue. But it's almost like they're completely held back by Canopy at this point. And I'm just fascinated with how that's going to play out. I'm fascinated by Canopy, me always thinking that they were going to be the leader with Constellation behind them, but they still have some good things going for them with like things in the US that they don't even include on their, at least I don't think they do, on their balance sheet, like the Wanna brands and BioSteel and Stores and Bickle and all these different ways to get in, and then ownership of TerraSend and potentially Acreage. And I'm like, maybe one day they return, maybe not. But Acreage seems to be doing well. And I'm just so thrown off by, even regardless of that, like the market in general, everything's down like crazy, and they're all doing pretty well. Like cannabis is doing well, and it's going to keep doing well. But I don't know if it's people are making easy money elsewhere on the Bitcoin and this and that. No one's paying attention to this stuff, and we're just a couple years early. But I do believe that it's all going to play out with time. But time is a hard thing to fight against sometimes, you know.
It is, and you touched on some very interesting points right there. So I'm not going to sugarcoat it. Cannabis has been in a 11-month drawdown now, from its highs back in February of 21. A lot of things are down 50% or more. And I had a book come out a year and a half ago, and the very first chapters I was talking about extreme volatility, and I looked at past history. No one should be invested in cannabis if they can't handle a 50% drawdown, and if they can't handle a drawdown of a year or more. Right. Now, is it brutal? Yes. Is it unpleasant? Yes. Did I see it coming? No. You never see it coming. Everything's easy in hindsight.
Sure.
But after Biden got elected, and then we had runoffs in the United States, and the Democrats supposedly controlled the Senate, everybody thought, cannabis legalization is right around the corner, and the stocks got driven up too much, too fast. And then everybody got the realization that, oh, maybe they're not doing this legalization right away. And I also have to remind people, no one ever really said legalization. You're not going to be able to walk into a Walmart and, buy some canopy products from Canada. There's going to be federal reform, and no one's quite sure what's going to look like, but we're expecting banking. We're expecting to be able to uplist on the major exchanges. We're expecting 280E tax reform for people that don't know that. Cannabis companies can't even deduct their business expenses. It's rather outrageous. Yep. A lot of reforms are coming. It's debatable when, because politicians are politicians and they play politicians' games with each other. So we don't know when it's coming, but it's coming. Almost no one says it's not coming. It's a matter of when, not if. So yeah, you got to be able to handle long-term drawdowns. There's some reasons behind it that make sense. Like these US companies have to list on a secondary exchange in Canada. They trade over the counter in the US. The volume they trade at is anemically low. It's rather pathetic, the volumes that they get. So yeah, they get shorted a lot. People on the social media like to use the word manipulation. No, they're not getting manipulated. They're just getting bought and sold. And people that like to short them, they'll short them all they can. They'll make every damn penny they can shorting a stock until it stops. Sure. But you got to be able to handle those things. Changes are coming. I still feel very strongly it's a big long-term opportunity for the future. Mm-hmm. But I still got to remind people to keep their Canada in Canada, keep their US in US. Mm-hmm. And I want to come back to some points, that you seem to know Acreage very well and what Canopy's doing. In my international strategy or global strategy, our fund YOLO, we do own Canadian companies. I already said I like Village Farms a lot, but I own Canopy and I own Tilray. I don't love them. I hold my nose a little bit while we own them, but they're not going anywhere. Right. They're not going away. They are well funded. They're fairly large. And very importantly, they are scratching and clawing to get in the United States. Mm-hmm. They are making acquisitions of beer companies. Canopy has, a deal with TerrAscend, as you said, and a deal with Acreage. These companies have inroads to the United States. So when that federal reform does happen in the United States, those are the few companies that are going to have roads to the United States. Now, some of the other Canadian companies, mm-hmm. I don't know. Some people think we're going to have this sweeping legalization in the United States, and some of these other Canadian companies are suddenly going to swoop in and be able to do good business here. No, they don't have any licenses in the United States. They
Sure.
don't have any operations in the United States. They
Right.
don't have any inroads to the United States. Canopy does. And they're well funded. They got money on the balance sheet from Constellation Brands. Tilray does. Those companies are at the top. Again, they're not going away. They have some inroads to the United States, but I'll still come back and say the U.S. operators that we were name dropping earlier,
Yeah.
Green Thumb, True Leaf, Curaleaf, Cresco, Verano, those companies are multi-billion-dollar companies now with a lot of licenses, with a lot of dispensaries, with a lot of operations. They're starting to get branding, really turning into more of consumer packaged goods companies. That's where the real money is for the future.
Right. Totally, man. Yeah. And what about some of these like goodness growth? Like it used to be Vireo. Like they seem to be a well-run company, but like
Yep.
do you see that playing out similar to what maybe will happen in Canada when do they just get swallowed up by some of these bigger ones, or is there just enough to go around where that could be its own successful business in the long run?
Yeah, it's a little bit hard to answer because this is still a very small industry. Look at other industries that are selling beer, selling products, look at the restaurant industry, all sorts of things. Cannabis isn't just a commodity for sure. It's a finished product, and it's it's a lot more like consumer packaged goods products. So those smaller companies, I still own a handful of them in our fund. They're not heavily weighted. Um, they're low volume stocks.
Yeah.
They're low price stocks. A number of them are going to be acquisition targets. That's a good thing.
Sure.
But I always remind investors, don't own a stock because you think it's an acquisition target. You're going to be waiting and waiting and waiting, and it's going to be painful.
Right.
You can't pick which ones are going to be acquired either. It's a fool's game. But being selective in the high quality ones, sure, they can be good as long as you have a very long-term focus and you're willing to wait, and you realize they're not very liquid.
Yeah.
Yeah, I certainly own a handful of they don't like to be called tier 2 or tier 3 companies, but they in cannabis they have all this tiering systems. I don't know who the hell made up the tiering systems, but those tier 3 size companies, we like a handful of them, but they're a little hard to buy, a little liquid, and the good ones are going to be acquired someday.
Yeah. How do you view Riv Capital? I know they got that big deal with Scott's Miracle-Gro. That's super.
Yeah,
I'm fascinated by them. I used to like,
should be.
yeah. I mean, they're sitting on all this cash, right? And they're going to be around, obviously, with Scott's Miracle-Gro. But like,
Well,
they got all this cash, and like, what are they going to do with it? It seems like.
well, here's a funny thing for you. So yeah, you seem to know an awful lot about the Canopy and
I do.
Riv and
Yeah.
TerraSend and Acreage. No, I respect that.
I know
So
about the other ones too. These are the ones I bet on. And like, I mean,
yeah,
I was investing in Canopy before Constellation put, put the 4 billion. It was like right after they put the 248 million. I'm like, all
sure.
right, great. I'm a real estate guy. And I was like, this is a company that's going to be around, because I was investing. I don't know if you remember, but like when there was like TRTC and PHOT and all these ones that were like penny stocks that were like, it was a horrible experience for me. And I was like, finally, there's a real one, Canopy. And then all this
Yeah,
stuff happened. Anyways,
yeah.
go on.
So Riv used to be called Canopy Rivers and reorganized. Now it's Riv Capital, and they actually delisted from the Toronto exchange because they wanted to focus on U.S. investments and have inroads to the United States. Our good friend Todd Harrison of CB1 Capital often says the quote, bet on the jockey, not the horse. Well, the jockey at Riv Capital now is Jason Wild, and Jason Wild is also the jockey at TerraSend. Very respected, very smart guy. I like him, and he is a good jockey to bet on at the head of Riv Capital and at the head of TerraSend. We like Riv Capital a lot. It's for now a little bit under the radar. Not too many people are aware. It's not a heavily traded stock. But yeah, they're sitting on cash. And when you look at the deal they made with Scott's Miracle-Gro, and you look at their balance sheet, they're barely trading above value. I mean, that is a great, great value stock right now. We own quite a bit of it in our fund, YOLO. And no, they're waiting on the sidelines, ready to pounce into the United States when the timing is right. And Jason Wild's a very connected guy. So, they're going to make some acquisitions with all that Riv Capital money when the time's right. And I expect good things out of it.
That's great. That's cool to hear. I love it, man. I love, I'm in Texas, so I don't get to talk this stuff with people that often. Yeah. I read all the reports. I read the filings. I have people come on our podcast and stuff. But it's such an interesting space. And I'm just so ready for like something to turn around. I just want like some big news to come out and like think, not necessarily legislation, but just something to change the sentiment. Like I'm not too, like you said, you got to be in it for the long run. And I understand that. Like I'm really in this for like 5-10 years at least.
Yep.
But man, it's just been just negative for a year.
Yeah, well, we are waiting on those announcements. I hate that everything's been so tied to politics and politicians recently. But I've reminded people, I'm looking forward to the next round of earnings coming out. I mean on the U.S. side of the border. And I don't care if somebody says this state or that state's going to be a little soft, or this company or that company, because most of the U.S. earnings quarter after quarter have been fantastic. And when you factor in that they keep adding new markets, they're not even selling a single legal joint in New York State yet. Right. Adult use has been approved there, but right now it's only a black market and, a limited medical market. But, black market sales in New York are huge. They're huge in New Jersey. Those are going to add on to U.S. sales. So I'm looking forward to those earnings coming out, just to remind everybody again that quarter over quarter growth in cannabis is fantastic. And I'll say this, even without something happening at the federal level, reform wise, I have never seen a disconnect so big between stock price and company fundamentals. And I'm talking about company fundamentals in the entire industry.
Yeah.
The revenue growth quarter over quarter versus the stock price, it is outrageously disconnected at this point, and it can only last so long. These things are going to pop.
I'm with you, man. Blows my mind. Like what you said about Riv Capital. It's like, at least maybe not too long ago, I was like, they have more cash than their market cap. And that's excluding everything else that they own.
Yeah.
And I'm like, this doesn't make sense, but we'll figure it out. It'll take some time.
Yep. It'll figure itself out. Definitely.
Yeah. Well, cool. Anything else that you think you'd like to touch on, or anything valuable that you might want to throw out there?
Yeah, it's something we kind of touched on in general. These ETFs, the thing about an exchange traded fund is it is not only liquid and listed on the exchanges, but it's transparent. So anybody listening, you can go to our website and you can look up our holdings every single day. If you want to rip them off and do your own trading, knock yourself out. That's the beauty of an ETF, is daily transparency. We're required to list the full holdings of the fund every single day, and we got nothing to hide. So feel free to look at our holdings and see which stocks we like in the US, see which stocks we like in Canada. It's all right there for the taking.
Yeah. It's pretty interesting too. You guys had earlier today, I was looking, Acreage had like 8,000 shares traded. And like you guys are sitting on a lot of cash, and obviously you're not trying to manipulate, like you said, but you have some power on buying some of these shares. You could buy up all the Acreage shares for months and really do something to these prices. But I know you guys are in it for the long run, and it seemed like for a while, maybe not anymore, were you guys sitting on a decent amount of cash, kind of just waiting to deploy some of that to some of these different stocks?
Yeah. Well, I can never own so much of a stock that we we control it or something
Yeah.
like that. So
No, it's just like I have so many shares
yeah,
of acreage. Like I can't even sell it if I want to. It's like you said, it's just I'm just kind of getting to the volume that's going on out there.
Yeah. You know what? Something is going to happen at a federal level. Everybody knows it's coming, and that's going to change the volume, and it's going to change the liquidity of those stocks. But the other thing is, we're not a tactically managed fund. I'm not trying to outsmart the market. And one week I'm invested, the next week I'm going to cash and going back and forth. But yeah, through November and December, we had, we get inflows of money from investors, and I chose to hold a much larger percentage in cash than being fully invested. Sometimes I had people in the Twitter sphere out there yelling at us, why won't they deploy that money? Well, no, it's turned out we're pretty damn smart because stocks have gone down, and we're buying them now at lower prices.
Yeah.
So
That's great.
our fund has also had very, what I would call, sticky assets. Again, cannabis stocks, just nothing to hide, been an 11-month drawdown. It's been rough, but we haven't really lost assets. It means most investors have been stuck with it for the long term. They see the positive value. They think it's still coming, especially in US cannabis. So, we still have well over $1 billion in assets. Money goes in and out every single day, but we've been able to keep most of those assets. And we try to be smart with it. Am I going to cram $100 million in the market all at once and push stock prices up?
Right.
Well, that would work for a day or two. But in general, there's this thing called buy low and sell high. So when we're trading, we're trying to trade carefully and wisely and get good prices on what we're buying within the fund, and manage it tax efficiently as well, where we take all those things into effect.
Yeah, absolutely. Well, this is great, Dan. I really enjoyed talking about this. What are ways that people may be able to get a hold of you guys or invest in your fund? Like what ways can people add value for y'all?
Yeah. You allow me to pitch here, huh? That's nice.
Come on.
So, it's the beauty of an exchange traded fund. You say that you have the ability to buy these stocks. It depends on what brokerage firm you're with. There's people out there in the United States, whether they're individuals or institutions, that can't invest in Curaleaf, that can't buy Green Thumb Industries stock. But our fund, MSOS and YOLO, they're listed on the New York Stock Exchange. You can buy them virtually any brokerage firm. You can buy them on Robinhood. You can't buy those stocks on Robinhood. That's just an example. There's a couple firms out there, some of the biggest wirehouses, where you can't even buy our fund because you can only buy from their approved list of funds. But our fund is very available to investors. You can trade options on our fund. That's kind of nice because you can't trade options on these OTC US cannabis stocks. So go to advisorshares.com. Advisorshares.com is a real easy website. There's a page there for every one of our funds. And as I said, there's a page for MSOS, a little bit of the background, over the story, but every single holding listed and updated every single business day. So it's there for the looking. And our international strategy, YOLO, it's there for the viewing as well.
I love it. Well, thank you so much, Dan. Really appreciate your time, and we're excited to see what happens in the future, and hopefully things get turned around. And thank you for sharing everything you did today.
No, thanks for having me on and for allowing me to talk my funds a little bit. Let's do it again sometime.
Absolutely. We'd love to. Thank you guys for tuning in. It's the Real Estate Podcast. Dan Ahrens, we're out.